Hey everyone, welcome back to Corporate Decoder, the place where we peel back the layers of corporate speak and find out what is really going on with your favorite companies. Today we have Vroom Incorporated, a company that sells cars online, and they have a new report out that tells us about some interesting financial moves they've been making. If you like deciphering these important documents without the corporate jargon, make sure you are subscribed. You can also join our Discord community linked in the description below for more in-depth discussions. So what is this report all about? It's a Form 8K, which basically means it's a report for big events that happen suddenly and are important for investors to know about. Think of it like a company announcing a major change or a big deal. And Vroom has some big news that impacts their long-term plans. We need to understand what this means for you as someone who might be invested or just curious about the company. This report is filed under a specific section of the law that companies must follow when important things happen. So this isn't optional for Vroom, they have to tell the public about it. It's all about making sure the information is out there for everyone to see. The company we are looking at is Vroom Incorporated. You may know them as an online car retailer. They've been through some ups and downs in the market, and this report sheds some light on their current strategy to navigate those challenges. Let's get to the meat of it. On the 25th of November 2025, something significant happened. Vroom entered into an agreement, a note purchase agreement to be exact, with an investor named Robert J. Mylod Jr. Now this name might sound familiar if you follow Vroom because Mr. Mylod is the independent executive chair of their board of directors. What did this agreement entail? They agreed to issue what are called senior secured delayed draw notes that will be due in 2026. Think of these like loans that the company is taking out, but with specific terms and conditions tied to them. Initially, they are raising $5 million with the potential to raise up to $10.5 million. This is a pretty important funding round for them. How much does this loan cost Vroom? The interest rate is tied to something called term SOFR, which is a benchmark interest rate plus an additional 7.50%. This is a pretty substantial interest rate, meaning it is going to cost them a good amount of money to borrow this capital over time. This is not a cheap loan. And here is a crucial detail: these notes are secured. This means that if for some reason Vroom can't pay back this loan, the investor has a claim on the company's assets. This makes the loan less risky for the investor, but a significant commitment for Vroom. So why are they taking on this debt? The company says they will use the money for working capital and general corporate purposes. Working capital is like the everyday cash a business needs to operate to pay bills and manage its business. General corporate purposes is a broad term that can mean many things, from investing in new technology to covering operational costs. This new loan agreement falls under a specific category of reporting for the company. It's a direct financial obligation, meaning it is a debt that Vroom owes directly. This is important because it directly impacts their balance sheet and how much debt they carry. Now let's look at their sign-off. This is where the report is officially finalized. The report is dated the 26th of November 2025, meaning this agreement was finalized and signed the day before. And it is signed by Jonathan Sanderson, who is the Chief Financial Officer. This indicates that the company's financial leadership is aware of and responsible for this transaction. Looking at their stock information, Vroom Incorporated is trading under the symbol VRM on the Nasdaq Global Market. This means the company is publicly traded and their stock is available for anyone to buy or sell. Vroom is not currently electing to be considered an emerging growth company. This tells us they are beyond that initial startup phase and are expected to comply with the more stringent reporting requirements of larger established companies. Now, for my take on this, Vroom is clearly in a phase where they need to secure funding to support their business strategy, taking on debt. Especially from a key figure like the executive chair, signals a focus on bridging financial gaps for their operations. The interest rate is notable, suggesting that the market perceives some risk in lending to Vroom, or perhaps this reflects the general cost of capital in late 2025. The fact that the notes are secured means Vroom is putting its assets on the line to get this money, which is a significant commitment. The immediate use of funds for working capital and general corporate purposes implies that Vroom might be facing cash flow challenges or is investing heavily in operational improvements or strategic initiatives that require readily available cash. This isn't necessarily a bad sign, as many growth companies need external funding to fuel their expansion, but it does highlight that their internal cash generation may not be sufficient at this moment. A key risk here is the repayment of these notes, with a maturity date of November 2026. Vroom has a clear timeline to either repay the principal or potentially refinance the debt. Their ability to generate enough revenue and profit to service this debt will be critical. Looking ahead, investors will be watching to see if these funds translate into improved business performance, increased sales, or greater efficiency. If Vroom can successfully leverage this capital to strengthen its market position and profitability, the debt will have served its purpose, but if not, it could become a significant burden. So what is the overall picture? Vroom is making moves to shore up its financial standing and support its business operations. They are using debt financing from a key insider, which is a strategic decision that comes with its own set of risks and rewards. The high interest rate and secured nature of the notes emphasize the importance of this funding for the company. It will be crucial to monitor their financial performance in the coming quarters to see if this strategy pays off. Alright, that is our breakdown of Vroom's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.